Good morning, everyone. My name is Dominic Carosa. What I'd like to do today is just share with you the Crowd Mobile story. Before I do that, I'd just like to ask everyone to just think back 10 years. Think back 10 years when we didn't have a smartphone. How did we actually communicate to people? How did we experience entertainment? And with the advent of the smartphone, what are we doing these days? We're experiencing entertainment, content, communication with others. We're buying things more and more with regards to using mobile devices. And that's the sector that Crowd Mobile operates in. And I won't bore you with the numbers, but the numbers in terms of mobile commerce, mobile advertising, and in payments. Mobile payments is growing very, very rapidly across the world. And that's the area that Crowd Mobile is involved in. So we provide M-Content, which is mobile content, and M-Commerce, which is mobile commerce, out to consumers in over 50 countries using an M-payment capability. There's a lot of M's because it all relates to the mobile phone. It's effectively being able to entertain and buy things from your mobile phone. And to help us achieve that, we are currently connected and growing to over 150 mobile carriers globally, including the Telstras and the Optuses of the world and the BTs and Oranges and various other mobile telcos. From a corporate perspective, the company was listed in January, so we're the new kids on the block. We've just completed a major acquisition in Europe, which has added further revenue and EBITDA to the business. We have a market cap of roughly 40 million, an EV and enterprise value of around 60 million. The business, as I mentioned, is truly global. We've got people all around the world in terms of the company, but we've got reach in over 50 countries. We are selling products and making money in 50 countries around the world. And the strategy over the next few years is to continue expanding our M-payment capability. It's important to note that 88% of our revenue is actually derived outside of Australia. So we're certainly very happy with the depreciating Australian dollar. And our real growth opportunities over the next few years will be in Asia, Africa and Latin America. And the reason why M-payment, mobile payments, are even more important in those markets than some of the Western markets is because people in those countries typically don't have credit cards. Their mobile phone is the way that they conduct commerce. This is just a snapshot of FY14 compared to FY15 pro forma revenue and EBITDA. As you can see, all the key metrics post the Track acquisition are moving in the right direction. We only announced yesterday, just for 1 month, we delivered a 1.1 million EBITDA profit for the business just in the first month of having acquired the business. And as we stated to the market, November is typically a weaker quarter for us. But as you can see, there's quite solid growth. We basically we've got a large range of products that we create in-house as well as license, from fashion advice using our app called Passion for Fashion, to getting advice from an app called What Would Jesus Do, which is very popular in the southern USA, and various other apps out there that we're continually launching. But more importantly, we have a very strong roadmap of future products that we'll be launching into various sectors. We're doing deals with celebrities and other big brands to launch various apps, what we call white label style deals. One of the KPIs that we actually communicate to market is our paid messages or billed messages. As you can see, there's been this is actual growth quarter on quarter, and PCP is basically up over 100%. So this financial year versus last financial year is up 100%. Now, if there's only one slide that you take away from today, I think this, from an investor's perspective, is the most important slide. It's looking at the valuation of Crowd Mobile compared to its peers in the marketplace. So today, Crowd Mobile, as I mentioned, has an enterprise value of roughly 60 million. We've only just completed the Track acquisition and we're only just listed in January this year. From an EBITDA multiple perspective, we're trading at just under 4. You may ask, why so low? This is basically the second day of a roadshow for the company. We just got back from Europe a number of weeks ago, and we're only now just starting to speak with investors and basically being in a position to tell the story. The average multiple for tech stocks on the ASX, EBITDA to EV, enterprise value, is around 17, and some of our peers, I'll give you an example, Mobile and Brace, is trading at just shy of 30 times EV to EBITDA multiple. We've got a very experienced board. Some of you may recall a gentleman called Theo Hanakis. You may not remember the name, but you remember the company that he ran called Melbourne IT. He ran that for over 10 years, and as you if you were a shareholder, you would have been handsomely rewarded with dividends every half year. He grew that from a penny stock into a couple of $100 million company. When we were doing a search for a chairman, or chairwoman, we asked ourselves, we were trying to find someone who had built a global technology company from Australia, and Theo was basically top of our list, so we're quite pleased to have him on board as our chair. And only yesterday we announced that Hans de Back, one of our non-executive directors, has now moved into an executive role in the business. Now he's the CEO of Track, which is the company that we just acquired in Amsterdam. Hans has had and has significant experience in the technology space. He's in fact built 2 businesses very similar to the ones that we acquired, and he sold them each for over 50 million euro over the last 10 years. So he brings a wealth of experience to the acquisition we only completed about 5 weeks ago. So I'd like to thank everyone for their time. I'll be here for the next hour outside of at our stand with our CFO, Christian. So feel free to come up and ask any questions with relation to the company. Thank you.